Hey guys, what's up? Alec back with the daily stock market, and look at that. We had a super red day in the stock market on Friday. The S&P 500 and the overall market down about 1.5%. Individual stocks also some down around 5%. Tesla down 2.5%. Now in this video, we're going to be talking about the 5 best artificial intelligence AI stocks, and this is going to be the first video in a two-part series. So we're going to talk about 10 stocks total. So make sure you subscribe with post notifications on so you don't miss the second video on the next 5 best stocks to buy now for artificial intelligence growth. Okay, and the first stock that we're going to be talking about is Amazon, ticker symbol AMZN. And by the way the video is going to work is as we progress further in the video, we're going to talk about more risky stocks as time goes on. So make sure you make it all the way to the very end of the video to hear about those AI stocks that most people aren't talking about right now, with more risk but also more reward attached to them. Now let's go over why Amazon is a good artificial intelligence stock, and some of you guys might not know that it is. Okay, first off, we have the stock down 38% in the past year. And if we look at their all-time high, we can see it's closer to $185 per share. There is a very great chance that Amazon didn't peak at $185 per share. That's not the all-time high the stock will be if you look decades in the future. Obviously, Amazon is going to be higher than $178, $185 per share. The question is just how long will that take, which we'll be going over in this video. Now, at current prices of $93 per share. So yes, the stock price was higher on Amazon 5 years ago than it was today. So it is a pretty good deal. So not only are we going to go over the stock, but we're also going to go over the stock's current price to see if it's a good buy at the current value. So in my opinion, Amazon is going to be falling down closer to 5-year lows and visiting around $65, $75 per share. So if we scroll down, the first thing that we're going to see is with Amazon is they are a not profitable company right now. Okay, if we keep scrolling down, we can see that their most recent earnings update came in at a negative EPS. Net income translates to EPS, so let's look at the net income first. Here we can see that they have been greatly falling on their net income, and net income is one of the most important things to be looking at when you're looking at a stock in the stock market, especially in this current day and age. Okay, the quarterly is looking really bad. Q4 2021 was 14 billion, and then they were negative 2 quarters in a row after that. If we look at the annual growth on that net income, we see that 2022 was actually a negative earning year for the company, which is a huge red flag after they were growing so rapidly, growing 83%, 56%, growing to 33 billion in their net income. Now their net income is losing. Although they are continuing to grow their revenues, we see their net income decreasing. So we're going to do a deep dive in a few days on Amazon, why that's going on. But all you really need to know right now is there's a good chance that Amazon stock could fall into the 80s and even as high as low as $75 per share. So that's where my current price target is to load the boat on Amazon, under $75 per share. Here we see an article that we will go over real quick here. Amazon stock will Hugging Face partnership help Amazon win AI wars. Amazon has announced a strategic new partnership. The tech giant is partnering with artificial intelligence startup Hugging Face. This may give Amazon an important edge on the growing AI wars. Okay, the hunt for the next ChatGPT is on, and Amazon just took a significant step forward in the AI wars. Today, the tech sector leader announced that it will be partnering with Hugging Faces, an AI startup with wide-reaching technology applications. Amazon stock has been rising this morning since the news of the partnership broke. Does the deal mean that Amazon will have a competitive edge? Let's go ahead and take a closer look. Clearly, if successful, this partnership will be a significant win for both companies, supplying AI developers with the tools they need to create new models and products is a cornerstone of the AI boom, and it won't be slowing down anytime soon. Hugging Faces is a central hub for its AI professionals to display models and open source code. Now with the reach of AWS, it will be able to reach even more developers across the globe. so it'll partner with AWS well. Looks like it'll fit right in the business nicely. Additionally, if Bloom can truly compete with ChatGPT, Amazon will have an undisputed advantage in the AI wars. This new partnership puts Amazon stock in an excellent position to soar as the AI boom continues. And one more quick update before we move to the next stock, otherwise we're going to be on Amazon forever. Amazon delivers AI and ML services and infrastructure throughout AWS, Amazon Web Services. The e-commerce giant also uses AI in its own online store to make product recommendations. Alexa, which a lot of people keep forgetting about, the virtual assistant of Echo devices, is AI powered as well. So they're going to keep continuing to improve on AI. But that leads us into the next stock, which is Google stock. Their artificial intelligence is smarter than Alexa currently is. So they have a little bit of an edge on that type of AI right now. They're currently down 33% in the past year. Okay, they're at $89 per share. But the question is, can Google get as low as $75 per share? I definitely think that we will be going below 85 and into the $70 range once again. My price alert's set at 76, so that's where I personally want to be buying Google at. We can see the price to earnings ratio is closer to 21, implying that it is a better deal than Amazon. And personally, right now, I like buying a Google a little bit better than I like buying Amazon. Here we see the EPS of Google going lower and lower quarter over quarter as well, but it's not as concerning as Amazon because Google is still at $1 on their EPS, where Amazon is going into the negative ranges, negative 1 cent, negative 2 cent EPS. So those are bad to see when they're reporting negative earnings on their net income. At least Google's reporting positive earnings on their net income. So there is a chance that Google will not sell off as much as Amazon will in the next few weeks, especially as the AI boom continues. Google's definitely more closely associated with AI than something like Amazon is anyway. Google parent Alphabet recently launched a test version of its own AI chatbot called Bard, which functions just like ChatGPT. Ask it a question and Bard quickly accesses, compiles, and summarizes online information to provide an answer. Some see this as the next evolution of search. Rather than querying a search engine to receive a selection of web pages to view, you get one answer that's both simple and complete. Unfortunately for Alphabet or Google, Bard botched its test launch in a short demo video intended to showcase Bard's power. The chatbot gave an incorrect answer. Clearly, Google has some work to do on this technology. Okay, but in the long run, you can't just look at this short-term nonsense like they botched a test run. Okay, that's just short-term FUD that's going to push the stock down for long-term investors to pile in at a low price. We have to look at the long-term side of things, and I think Google, as dominant as they are in search, their AI technology is already ahead of a lot of other people. They have a jump on the game. So I think overall, Google will be a great stock that will beat out ChatGPT in the long run. Outside of Bard, Alphabet offers AI tools and infrastructure through its Google Cloud Computing also. Now, I do want to throw a bonus stock in here, an ETF. Okay, so it's not a stock, it's an ETF. It's an ARK-led ETF. So Cathie Woods is behind this one. ARK, ticker symbol ARKQ. This is the autonomous technology and robotics sector. Okay, in the past month, it is up a little bit because of the AI boom, but in the last 5 years, just since 2021, it's still down 51%. So there can be a buying opportunity here with this ETF. So if we scroll down, we can see that there's 38 companies in this ETF, which is not a lot at all. We can see that it is the inception date or the creation date was 2014. We can see that it's mainly technology and industrials. And if we look at the top 10 holdings, we can see that the biggest one there is Tesla. Okay, Tesla is a great AI stock, and we'll probably be talking about them in one of our next videos. So make sure you subscribe with post notifications. Tesla is actually a stock that needs its own video for an AI update. So we will make that soon. After that, we have UPath, Trimble, and some other companies that I haven't heard of. Now, I have heard of Deere and 3D Systems, but what you can do is take a deep dive into these 10 different stocks that are listed here, because this makes up for 64% of the fund. So if you like all 10 of these stocks and you think there's some potential with them, and if you like Cathie Woods in general, then this is probably going to be the stock for you, where you set it and forget it. It's a actively managed fund, so if one of these stocks are not performing, or if one of them is going bankrupt or on the verge of it, Cathie Woods is going to sell that stock for you and put more of a better stock in its place. So you don't have to worry about selling, buying all the time. You just dollar cost average in this for the long term if you believe in Cathie Woods, if you believe in these top 10 stocks, and if you believe in AI in general. Okay, now as we're falling more and more down the AI rabbit hole, we're getting more and more risky. We have Palantir Technologies up, PLTR, down 10% in the last week, up 20% in the past month, down 30% still in the past 1 year, and from its peak, which was closer to $35 per share, still down 77% today. We're under the IPO price. This is a stock that's under $10 per share. It's currently sitting at $8 per share. As we scroll down to get a synopsis of Palantir, we see that they are a holding company which engages in the development of data integrations and software solutions. It operates through the commercial and government segments. Okay, so that's an important thing to consider. It does a lot of government work, which it can be risky, but it could also be rewarding. That's why this is a little bit more of a risky stock. The commercial segment offers services to clients in the private sector. The government segment provides solutions to the United States federal government. Okay, so if they get a huge contract, for example, like a $20 billion contract, that could be a huge thing. Okay, but if they lose a $20 billion contract to one of their competitors, that could, take the stock out and possibly even go bankrupt. So a lot of Palantir is depending on the U.S. government, the federal government, and non-U.S. governments as well. The firm offers automotive, financial compliance, legal intelligence, mergers and acquisition solutions. Its products include Palantir Gotham and Palantir Foundry. The company was founded by Stephen Cohen, and as we scroll down, we can continue to see that it has a market cap of $16 billion. Some bullish things to watch out for on Palantir. Palantir's focus on module sales could potentially lead to substantially more commercial clients, which the firm could subsequently upsell. The products targeting both commercial and government clients. Palantir has a distributed top line with a non-cyclical government revenue, insulating the term's top line during the lean times. Palantir has strong secular tailwinds, which means that the sector of AI that they're in, they're going to have a boost from the AI boom in layman's terms behind its back as the AI and ML market expand to grow rapidly due to the exponentially increasing in data harvesting by organizations. Data mining and AI go hand in hand. That's why I think Google's going to be so successful. Also, Palantir operates AI data mining platforms for government agencies and enterprises businesses. Gotham, Palantir's government platform, finds patterns in data so intelligence teams can locate and respond to terrorism threats. Unconfirmed sources say Gotham played a role in capturing Osama bin Laden in 2011. Businesses use Palantir Foundry to house, transform, and manipulate organizational data to streamline processes and make the decision better. Palantir went public in 2020 and recently reported its first profitable quarterly growth in the fourth quarter of 2022. And remember, right now it's lower than its IPO price. So Palantir could be a great stock to be looking into if you're looking to add a little bit more risk/reward to your portfolio. However, personally, I have price targets set closer to $6.75. That's where I feel comfortable buying majority of my shares. At $6.75, it's a very low risk thing. If you add in $200, $300, I think there is a strong chance of a 200, 300, even 500% gain on Palantir over the next few years if the stars align for Palantir Technologies. But remember, this is not financial advice, just some of my own personal opinions. There's no guarantee, especially with a risky stock like Palantir. And the last one we'll talk about is Micron Technology, ticker symbol MU, and they are down 5% on the month, down 34% in the last year, with an all-time high of around $95 per share and a 52-week, 5-year low, of $30 per share. Now, if we scroll down, what we can see about Micron Technology, they engage in the provision of innovative memory and storage solutions. It operates through the following segments: compute and network business units, mobile business units, storage business units, and embedded business units. Okay. The CNBU segment includes memory products sold into cloud servers, enterprises, clients, graphics, and network markets. The MBU segment offers memory products sold in smartphones and other mobile device markets. So they sell a lot of the chips and storage units and networking and compute units that go into like smartphones and other small chips for AIs, artificial intelligence, or computers to have more storage, memory, computing power, and so on. The market cap is $63 billion, so it is a big stock. They're also paying a dividend yield of 0.76%. And some bullish things on Micron to consider. Micron works with Samsung. There's a huge growth opportunity with Micron. SSDs, which store information in PCs and data centers, should continue to replace traditional hard drives. Their net income, if we go back, it is all over the place, but in the last 4 years, it seems like it has been growing from 2019 at $6.3 billion to 2022, now closer to $8.6 billion. If we look at the quarterly, though, it is a little bit concerning, so there could be a sell-off short term, which could create some buying opportunities. I also like this stock a lot, and it made the list because it has a really excellent balance sheet and a long history going back for a long time of a consistent balance sheet. Okay, we can actually go back even further than 2014 and find that it has had a consistent balance sheet. It's also a dividend stock, which I like about it also, but its balance sheet really never goes over 20% assets to liability or debt to asset ratio, which means that they have significantly more assets than liabilities, which means that they're not, risk of going bankrupt or out of business. And they have more money to do things in their business and grow their business and spend some money on research and development and things like that in the AI space as well. So I hope you guys really did enjoy that video. Went out of my day to make this video just for you guys. If you enjoyed it, just slap a thumbs up on it. Comment below what you liked about it. And if you want to join the close friends list, click on success number 7. Read some of those recent success stories. So many people have been having major success in the close friends list. And last week was one of our best weeks in the stock market with our success ratio over 90% on our calls. So message me here, read those success stories, join our program, join our family, share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.